What's up, Colorado? Today is your monthly market update for August 2021. Chris Lopez here, and my co-host Jenny Bayless. Jenny, what's up?
Not too much. How about you, Chris?
Just excited to talk about another monthly market update. We actually do have some data changing this month slightly, so different news in this case. There's a little more interesting news for us to talk about, so I am excited to dive in the data.
Yeah.
Because we're actually starting to see basically things starting to stabilize and come back to somewhat normal market trends.
Yeah.
So where do you want to start with the Springs market?
Oh, I guess we'll start with showing trends. That seems to be how we kick these off. So,
I actually think that's like the best one metric is the showing trends.
I do too. I really like them. So this chart, for those of you who are listening and not watching, it has had a steady decline from February of this year, which was just off the charts, higher than basically the past 4 years.
It was basically double of what the last 4 or 5 years have been, which have been very high historically.
Yes. And so this month is the first time that we actually dipped below 2020's listings per unit or showings per listing. So that was kind of interesting. And that's kind of when we started to see things take off last year, was about this time last year. So if it were like a continuous loop, you would kind of see it, going up. But I think that this is good. It's getting back to normal levels. Like if we look at 2019, 18, and 17, it looks like it's trending towards those figures. So.
And they just put some numbers onto there. I mean, historically this time last year, Springs has been right around 8 showings per property. Now, this month for 2021, we're at 10, so a little bit above normal, but like one more showing per property. But go back 6 months, I mean, high teens, 18, 19, 20 showings per property, which was double the 10 to 12 earlier. So, I mean, just a big difference. So we say decline, doesn't mean prices declining, doesn't mean markets declining, just means the showing trends declining, which is, somewhat recalibrating demand and supply. We still are very much in the seller's market. There's still less supply than demand, but it's becoming more the norm that's been the last couple of years, which sounds really odd to say right now, because the last couple of years have been pretty crazy.
Yeah.
So we're seeing similar trends here in Denver as well. Like this is the thing that still surprised me and everything is just how similar the two markets are as we dive into it, month after month. Denver, we're seeing pretty much the exact same trends, just, high amount earlier this year. And then the last couple months, going to August, we're getting closer to historical norms. I think we're a little bit slightly higher than what Springs was, but on a similar trajectory. We're at about 12 showings per listing, where historically we're about 8 to 9 showings per listing. But this is becoming much more, I'll say, historically seasonal. All right, so showings per trends. Before we jump into other metrics, what's that tell you looking in the future, looking at this type of data?
Ooh, well, if I brushed off my crystal ball, I would think that we're going to start seeing more in line with the previous 4 years, excluding 2020. I think that's what we're going to start to see, because you figure, seasonality plays a huge part in real estate. August, school started, people with families don't really want to move at that point. And then, as we get into winter, people are less likely to purchase homes. So I'm thinking that we'll probably see a similar shape from here to the rest of the year.
Okay. So from showing trends, what metric do you want to jump into next? What changed in the Springs market?
Yeah, let's talk about new listings. So we are actually down, which almost 300 units or 200 units, which I think is really interesting because the showings per listing decreased too. So I don't know if that's indicating a fatigue. People don't feel like selling their house. People don't feel like looking for a house. I have to imagine that there's just some exhaustion being present. That would be my best guess.
So when you say exhaustion, you just
I mean, we've been going 100 miles per hour
Yeah.
all year, and I think everyone's just kind of tired from all that. That would be my assumption.
Yeah, and I mean, just kind of talking with, just the, like, you know, lenders and other agents, like, I mean, we've heard just, people like they're dropping out, like, I think, we don't see that much in our client base, but I hear these stories like, oh, we've put in like 12 offers. First off, I'm like, well, what the hell are you doing putting in 12 offers? Like, I mean, knock on wood, we've been nowhere close to double digits on offers in any transaction we've done. So, I mean, for people like that would have to just be not just time consuming, but just like emotionally, if this is your average home buyer,
Yeah.
husband, wife, family trying to buy their next home or first home, like, you get tired of getting kicked in the stomach every weekend.
Yeah. I totally can understand and sympathize with buyers out there for sure.
Yeah.
Makes sense.
All right. So your new listings are down.
Mm-hmm.
So what about like days on market, sales price? If we're starting to see like showings per property come, back in the, stabilizing things, I would assume that would just mean less properties in contract, less bidding wars. But what's the actual data saying?
Yeah. So anecdotally, we're feeling a little bit of a pressure release. It just, we're getting more properties under contract, first, second time around, as opposed to, earlier this year where it might be number 5, number 6 for somebody. So that is good. In terms of median sales price numerically, from month to month, it went down 10,000 from 450 to 440, but that's still significantly up from a year over year, August 2021 to August 2020, which was 375. Okay.
So, say that again. So previous compared to the last month,
Mm-hmm.
the sales price is down, but over last year, it's still up.
Correct.
So does that mean we're falling off a cliff, or like what does that mean exactly?
So I know we've gotten a couple of questions in regards to our last podcast when you and I were guessing that we're going to see something like this occur. It is my opinion that it has to level off or even dip from a month to month standpoint at some point, because otherwise we're just keep going up, 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 up. It's the year over year or quarter to quarter that I find more important, because that's a bigger trend. Month to month, that could be 1 or 2 sales that totally, skew everything. So I think that is just a part of it leveling off. Even though the data is showing a 2% decline from month to month, I would not, freak out at this point. I think that it's starting to level off, which is expected because, at some point the frenzy is going to just turn into normal purchases.
And I kind of relate, like, for I think everyone knows I'm in passive investment in the stock market, index funds. I look at the accounts like twice a year just to make sure, the money's still in the account basically. But I kind of look at like the month to month, like, average price increase. It's almost like listening to like the daily headline news from the radio. Hey, what's the Dow and S&P doing today? Oh, it's up 30 points, down 50 points. Like, it just doesn't matter. Like, I'm sorry to any retail investor out there, what the Dow or S&P does today, it does not matter. Kind of the same thing here with just, real estate too. Like the month to month, it really doesn't matter in the big picture. Like, hey, even the 1 year, I don't care. 3 years, 5 years, 7 years, like, the big picture stuff. So as we talk about this, and I expect like month to month numbers and even like a year at some point to get flat, maybe negative at some point, like, don't panic. It doesn't mean the world's falling off. It's just the market is adjusting, and we can't have 15%, 20% appreciation year over year.
Yeah.
Like, you don't want that.
It's not sustainable.
It's not sustainable. Like that turns into a bubble then after 5 or 10 years.
Mm-hmm.
Which we are not in, since I said the B word. But I mean, Denver, we're seeing a lot of the same stuff here. Pulling up the trends here. Our active listings, compared to the previous month, is down by about 11%. So we had active listings at 4,000 in July, about 3,600 in September. And our new listings were 7,100 last month, about 6,100 last month as well. A lot of times seasonality we see inventory increasing a little bit. But again, with COVID and stuff going on, I agree. I think it's just exhaustion, fatigue, and I don't know, maybe people are hunkering down for the fall and winter. Like in our household, we're kind of bullish on what we'll be doing later this year with, COVID. And I think, we've had other friends have the same thing. So that will translate into people's plans for real estate as well, just when you look at the market as a whole. Our prices month over month, or compared to last month, we're down about 1%. On the average price. So in July, we were at 621. In August, we were at 614. So I'll use myself as a case example here. I bought my last rental in July. So according to this, I bought at the top. And I say that as a joke. It just does not matter. Because again, that month-over-month data, even year-over-year data is not that significant in my mind, because we're all in here for like long-term wealth building. So we are seeing, prices dropped 1%, but compare it to last year, we're up about 15% over last year. And that's just a huge gain, but again, not sustainable.
Correct.
And I mean, for Denver, all the other data, days on market, all this other stuff, it's all trending with the same thing in mind with what we talk about with showings per listing of just, hey, we're starting to see more of the more seasonal stabilization with the markets going on and all the data supporting it. I don't see anything I don't see any outliers or red flags.
I don't either.
No. All right. So in terms of data trends, market updates, anything else to talk about on there?
Yeah, let's talk about the loan piece.
Well, yeah. Well, this is, I think, really good news, and this is not market specific. As I scroll around here, so we got an email last week or 2 weeks ago from our lenders, Troy Howe with Nova Home Loans, forwarding us an email talking about a press release that came out September 14th by the FHFA, which is changing the rules about what we talked about back in, I think, March on the investment properties where they were buying less of them, which was causing a change in interest rates and point buy down. Mm-hmm. So that just came out about a week ago from when we were recording this. So I've not seen anything officially from Fannie and Freddie yet, but FHA kind of sets the guidelines. They follow it. Both Nova Home Loans, which is a lender that Troy's with, they stopped charging I don't want to say premium, but the, what'd you call it?
I was going to say premium.
Okay, premium.
Yeah.
Okay, just the premium that the market dictated based off of that. With hey, it's an investment loan, we have to charge you a higher rate or more points. They are no longer charging that, so I think other lenders are probably following suit to stay competitive. So if you guys are looking to buy a property right now or under contract, I would definitely talk with your lender about this to make sure that just ask them what's going on with this. Because if some lenders have not adapted, if some are just like, hey, we're going to let this ride out for a bit. You may want to talk to a different lender that's adjusted their pricing, because for an investment property, that could be, a 0.5 point in interest rate, could be a point or a 1.5 up front. So we're talking, a few bucks on here.
Yeah.
But I'm excited to see this. I have no idea why they changed it. I just saw the press release. I read it, and I said, great, that is good news. I just wish I did it 2 months ago when I bought my last rental property, but woulda, coulda, shoulda, right? And didn't you just close on a refinance a week ago?
Literally just closed 2 days ago on a refi. So yeah, kind of bummer timing on that, but
but here's in the grand scheme, like we talk about this and we're sharing our own investing to so you guys know out there, like in the grand scheme, it's not a big deal.
No.
This is why when it comes down to like looking at headlines or worrying about, oh, the Fed may taper off bond buying, what does that mean 3 years from now? Or, hey, this changed. Like, it just has such an insignificant impact on your total return. Don't stress about it. I mean, that's our views. We put our money where our mouth is on that. So we really want to share that because, a lot of times for new investors, they get very caught up in the news cycle or worrying about this. And it's something that you have zero control over. And frankly, okay, if this has a ripple effect in 3 years from now or your interest rate's off by 1/4 point, in the grand scheme of like wealth building and buying real estate, it just doesn't matter.
No.
So just want to share it with you guys and keep you focused on the long-term goal, the big picture, because that's what matters. And that's obviously what, we're interested in as well.
Yeah. And I think just to piggyback off of that, it's a really good example of why you're never going to get all the stars to align in the most perfect way possible. It just needs to be good enough.
Yes.
Yeah.
Yes, exactly. So we got talked about this, which is great news. Again, of course, if you're actively searching right now under contract, talk with your lender. Make sure that they've adjusted their price on there. Or if they haven't, I would mention this and probably get some leverage on there for like, oh yeah, hey, we're about to do that. We can make an exception for you. Worth the conversation because that can save you, $5,000. You can buy me, Jenny, a cup of coffee in a couple months then. So in terms of other trends, that was the main stuff to talk about. One last thing I want to mention is that we have the Investor Success Summit coming up on October 16th, which is a Saturday. In the middle of October, I think it's the 15th one that's being hosted. Jen and I are both presenting on there on the same stage. We're doing a 2-part series with Joe Massey on how to invest in high-priced markets, which is going to talk about Denver and the Springs. Because you look at traditional metrics, we're starting to get into higher-priced metrics. So how do you evaluate those? How do you make money in those? And why are people like you, me, Joe, and a bunch of other people still buying property? So we'll talk about that. But the big point of that event is it's a great local event. It's local investors, it's local vendors, it's local real estate professionals, it's local people. It's not a bunch of outside people coming in to sell some program that developed in Washington, D.C. or some other state. So if you guys are up for it, come out. Great networking, great education. They've always been fun. We'll be there. Come hang out. It's denveriss.com. Tickets are about $30 to get in there, so it's very inexpensive, and the ticket includes your first drink at happy hour. So please come out and hang out. We would love to meet you there. Yeah. And Jenny's already working on our presentation, right, Jenny?
I was going to say, yeah, I think I'll have my part done before yours, it sounds like.
I'm not going to take that bet, but yes. No, but it's going to be fun events. If you guys are itching to come out to an event, come out, whatever your comfort zone is, join us. We'd love to have you. It's 100% in person. We don't like mixing virtual and in-person events. We do a lot of, virtual events like this, so keep plugging in. But hopefully we can see you there in person and start doing some more in-person events as the world opens back up. So Jenny, any final thoughts?
I don't think so.
All right.
Yeah. How about you?
No, we will do this again in September, I feel like. Or do this again in next month, talk about September's results. So thanks a lot, Jenny. And listeners out there, if you guys have questions, comments, you want clarity on details, reach out to us. If you need help analyzing a property, finding a property, reach out to us. That's what we do. I do it up here in Denver. Jenny does it down in Colorado Springs and Pueblo. We love doing this. So please reach out and let's help you grow your portfolio.